So we get an appointment. So now any other tie down marketing, anything you do to just really lock it in before we're like, they're on the Zoom? Any other things you send them?
No, so if they don't book an appointment, obviously they'll keep getting dripped on, and that's your cue to start like making calls on that lead. If they book an appointment, it'll exclude them from the drip, and then it will send them a follow-up, and it'll be like, here's your reminder for your scheduled appointment on X day at X time. Calvin's gonna call you from X phone number. So cool. I have like all of the stuff that's gonna go in there, and then it will send them another, that happens right after they book the appointment. So it's like, boom, it's locked in. And then 10 minutes, I don't do anything more or less than 10 minutes. I'm like 10 minutes before, I'll say, hey, Grady, it's Calvin. This is your reminder for your appointment. In 10 minutes, you're going to receive a call from this number, 970-314-4037, period. And then no matter, I don't care what they say back to that, cancel and whatever, I'm calling them in 10 minutes.
Yeah.
And so we get to that, and then basically
that's your in-home badass right there. That's them texting you in the morning when at 7 a.m. going, I've got a doctor's appointment today, and you show up at 3:30 and the car's in the carport, and you're like, yeah, all right, Betty. And then they act like, oh, perfect, good to come on right in. Like we forgot they text us at 7 in the morning.
Yeah,
I love it.
And then from there, like let's say I get you on the phone, right? Or like that's the next step. So the calendar, you're looking at your calendar, boom, appointment right now. So be like, hey, Grady, it's Calvin. I'm just giving you a call for our IUL appointment. It looks like on here you had your goal listed as tax-free retirement. Does that sound about right? And they'll be like, yeah. And I'll be like, great. Well, my job is to go over the different options and how it's going to be properly structured, and if it's something that you can even get qualified for. A lot of people think you can just go buy this off the shelf. You can't really do that. The insurance company is the one that's really got to determine your insurability. So what I'm going to do is I'm going to briefly just explain how the product works, see if it makes sense for you, ask you a couple of questions to make sure it's even something you can qualify for. And then what we'll do is we'll go through the illustration together. Illustration makes sense. We'll send that illustration to the insurance company, and then they're the ones that ultimately decide if you're going to get approved or not. Does that sound fair? And they'll be like, yep.
That was fire. Will you say that again? And I don't mean to make you work twice as hard, but that was so good that people are going to ask. They're going to want to hear that again. This is your open, right? Okay.
Yeah. So I'll be like, Grady, and he'll be like, yeah. And I'll be like, hey, Grady, it's Calvin. I'm just giving you a call for your IUL appointment. It looks like you put your goal on here as tax-free retirement, correct?
Yeah.
Great. So my job is just to go through and explain how the process works. So a lot of these programs are set up differently, but the way this works, you can't just go buy this off the shelf. You do got to get approved for it. And what the insurance company is looking at is insurability. Okay. So they're going to look at, medical history, DUIs, felonies, that kind of stuff. But at the end of the day, you do got to get approved for it, and you can't just buy it. So my job is to go through and explain how it all works. What I'm going to do is ask you a couple medical questions, explain how the product works. I'm going to send you a Zoom link. We're going to go over the illustration real quick. The illustration looks good. We'll send the illustration to the insurance company. And at the end of the day, it's just kind of up to them if they're going to decide if they're going to take you or not. Some variation of that.
Yeah. Yeah. But you can't just buy it. Has some insurability. And we're going to send the illustration to the insurance company, see if they can cover it, which is we're putting in an application, Betty.
Exactly. Yeah. And I always think that's like the key piece at the end is like, hey, we're going to send an illustration into the insurance company to make sure that you can get approved for it. So that way they don't think that I'm just the information guy giving them a couple options for them to think on for a month.
Correct. I love it. Okay. So is it out now? Do you want to show an illustration?
Yeah. So like, boom, we say that. And then I'll briefly just be like, hey, I like to like ask a couple health questions up front. So that way, if they're like super banged up, I can transition right away and I don't dig myself a hole.
Yeah.
So
you're not down showing them some huge IU and they've got active cancer and you're like,
Yeah. So like before I just send them that Zoom link right away.
Okay.
And especially if they're older, I'll be like, hey, so real quick, I know you said your goal is tax-free retirement. So the way this product works is it's set up on a minimum death benefit to maximize the cash value. Simply, that just means that there's a 0% floor, so you can't lose money in it. And all the money that you put in again is 100% tax-free, so you don't pay taxes on it. Does that make sense? And they'll be like, yes. And then I'll be like, great. So now medically wise, the insurance company is going to look back 10 years. So I don't care if you've been prescribed it, never took it, anything like that. It's me and you versus the insurance company at the end of the day. So what have you been prescribed even if you didn't take it? And they're going to be like, nothing. And I'll be like, you've had nothing in the last 10 years, high blood pressure, cholesterol, diabetes. Oh no, I had I had this high blood pressure medication a couple of years ago, but I never took it. And I always make sure I write whatever they have health-wise down. Honest or not, I'm trying to pry out of them because you can't just white sheet an application or it's going to get denied. So I write everything down. So in this example, let's use high blood pressure and be like, okay, great. I just sent you over the Zoom link. Can you make sure you click on that for me? And then this is a note for you guys. Make sure you stay on the phone with them until they're in the Zoom because they will have audio connection issues. Okay. They barely use it. Stay on the phone with them. And then worst case scenario,
with Zoom, are they doing on their phone ever on Zoom? Are you texting it to them?
yeah,
So they're zooming on their phone.
yeah.
Okay.
So I just copy paste the link, boom, in the text. It's right to the drip. I'm like, click on this, download it, whatever you got to do to get in it. And then 99% of the time, if they don't hang up, when I'm in the Zoom, because they're like, they got technology figured out, I'll just keep talking to them on the phone and mute myself and pretend like we're just talking on the Zoom. Because if and when they check their bank information and it closes them out of the Zoom, I can still talk to them and fill the information in. So that's key right there.
How's money?
But basically what I'll do is I'll just pop open a screen share and I'll be like, hey, so great, just want to make sure you can see my phone screen or my computer screen. And then they'll be like, yep. And what I would recommend doing if they have less than three to four meds and it's less than, I would say like 300, 400 bucks a month, go straight to Ethos first. Okay. Because it's going to be a lot quicker, more efficient. And a lot of those times those people are just trying to get something simple set up. Plus they get a free will and trust. It's the easiest thing to talk someone into. So I'll just be like, I'll create a quote here. I'll be like, hey, you can make sure you can see my screen. Be like, yep. I'll be like, okay, so I'm just going to briefly fill out some of this stuff and then we'll produce a lot of the information we're looking for. So I'll just put your birthday in here and I'll be like, good. Male, Grady, to just confirm you're not a smoker, correct?
Non-smoker.
Good. And then I always select standard because the system will automatically autocorrect if they get approved for something better, but you don't want to backtrack on that. So it's better to quote, especially if you're doing minimum death, max cash value, it's always better just to do worst health rating class. It'll autocorrect and it's gonna make it look even sexier. So start there. So then I always go maximum cash value, which ends up just lowering the death benefit. And I'll be like, let me back up a little bit. So a little bit before this, as soon as I get into this main screen, I'll be like, so the average person puts around 5 to 10% of their monthly income into the product, just for investment purposes. What would be comfortable for you every month? I know everybody's budget is a little bit different, but it's got to fit your budget or it doesn't work at all. And then I'll wait. And then they'll be like,
say that again. Say that one more time. So we're trying to get what they're comfortable financially paying each and every month. And this is a crucial part of the, I mean, it is what it is. We can we can raise it up. We can raise it down. We can leave it the same. Right. But how do you ask it again? Most people
put around 5 to 10% of their monthly income into this product. What would be comfortable for you every month? I know everyone's budget's a little bit different. It's got to work for you monthly or else it doesn't work at all.
Okay.
And they'll be like, well, they'll say either two things. They'll be like, I don't know. I haven't done that far yet. And be like, okay, great. How much do you make a year? And they'll be like, 50,000. I'll be like, okay, so you make about, 3 to 4K a month, somewhere after that, after taxes. Yeah. So somewhere between 300 and 500 bucks would make sense per month. And they'd be like, oh, I don't know about 5, but I could probably do 3. I'm like, so like 250 would be a no brainer. And I'll just keep down selling. So I'll be like, yeah, 250. Actually, I could do that every month, no matter what. And I'd be like, great. So we'll start with 250. And then as your income grows, you get tax season comes around, you get bonuses, all that stuff. Great, no problem. We don't got to change nothing. We can just overfund it a bit. And they'd be like, that sounds awesome. I'll be like, cool. And so then I'll be like, I'll come in here. I'll be like, so
before this, have you explained the value of it? Have you explained the IUL yet? Like what they're excited
about? I didn't touch the surface level stuff because when I pop open the illustration, I want to be able to give them a visual of what each thing does. So that way they can put it all together.
Okay.
Because I give them the surface level stuff in the beginning, which is like the 3 things that I talk about, zero floor, tax-free, all that kind of stuff. And then I get into here because this is where the money maker is.
Sure.
And so I'll put their budget in here. And for Ethos, for example, I always do like one of these 2 options, pay for life, just depending on what their age is. And for agent tools, make sure you always just read this stuff to make sure that there's nothing that's going to transition you out of this, because this is like, this is their, they have great technology. They're going to catch everything. So just make sure you read it and that you understand it. Okay. And then basically what I'll do is come in here and click get a quote. Over here on the right-hand side, it's going to auto-populate basically like a highlight of the illustration. All right. So the first thing I talk about in the ethos illustrations is that I talk about the no cost benefits, because people get super excited about this. I'd be like, hey, Grady, you told me earlier, you know, you're looking for tax-free retirement. I assume you're like most, and you probably don't have a will or trust set up yet. Is that fair to say?
Yeah.
Great. So the cool thing about this product, if we can get you approved for it, like I said, you can't just buy it. They're going to give you a free will and trust as soon as you make your policy premium, and that's going to be good for life. So you can make adjustments to it, you can change it, but that's like $2,000 or $3,000 worth of value right there. So you're already saving a couple grand. How cool is that? And they're going to be like, that's awesome. I've been thinking about doing that. And then you'll be like, great. Well, it also comes with what's called living benefits, which just means that at the end of the day, if you ever have a heart attack, stroke, cancer, you have access to the death benefit money while you're still alive. Makes sense? And they'll be like, yep. And then I'll take a look at this illustration. So this person's a little bit older, so it's not going to look as sexy right away. But I'll just briefly go over like, hey, so the total amount of coverage you're going to start out with is around 108,000. Like I said before, the whole goal of this is to have the minimum amount of insurance in place required by the IRS to get all of the tax benefits built in the policy, which means that we'll have a 0% floor, so we'll never lose any of the money that we put in or gained. Additionally, all the money that you did put in and gained is 100% tax-free. You don't got to claim it on your income taxes. You're not going to pay capital gains on it. None of that good stuff, okay? Now, when we look at this quick highlight, this illustration showing us a 5.51% ROI. On average, these policies will typically range between 5 and 15% ROI on these types of policies. They're going to show you a really conservative illustration because they're not allowed to show you the highest possible returns. You wouldn't want me to show you the highest possible returns because that's probably not going to happen. So this is a safe estimate of what it would look like in the next 10, 15, 20 years in terms of cash value. And so if we take a look at it and we download this illustration, so for Ethos, I'll come in here and we'll download the illustration real quick.
What age was this client that you put in?
This client was 52.
52, okay.
So basically, we'll come in here. We'll look at the quick highlights of the policy. Again, I just want to touch $250 a month, minimum death benefit of 108,000, and we're showing a standard rating. So this is going to give us a quick highlight of numbers, and your critical chronic terminal illness benefits are right here. So, you know, in the next, like by age 57, so in the next, you know, five years or so, you should have somewhere around 10,000 or plus or minus a couple thousand in your policy. Okay. Like I said, it's all tax-free. No capital gains tax. This is what's going to look like at age 70, assuming you didn't overfund it and you only put the minimum of 250 in. You should have somewhere between 64 and, you know, plus or minus 5 or 10%. Okay. Now, let's scroll down to what I always like to look at is their MEC. So I look at their 7-pay. So I'm be like, hey, so in the next 7 years, they run this 7-pay premium, which means this is the amount you're able to overfund your policy by. So like I said, if you have bonuses, get a raise, whatever, you can increase the amount that you're paying per month over 250. Make sense? And they'll be like, yep. And then we'll take a look at, you can touch on this stuff. I don't really go into it too much because it's going to show a little bit more than I like to dive into. But what I'm looking for here is I'm going to be looking at the average rates of return. So if I look at this, so let's look at historical data here. In the last 5 years, has been about a 9% gain. Last 10 years, 11.56. Last 15, about 8.45. The last 20 years, about 9.11% gain. Does that make sense for you?
Because they're showing on the front illustration 5.51, and this is what it historically has done, but they just can't illustrate that because they've got to be. Yeah, it's great.
I was, you know, start on the bad and kind of roll into the good. I mean, either way, they're both good, but I just like to show them like what's already happened. So like, let's say in 2015, the market was negative 0.3%. Great thing. You didn't lose any money. That's awesome, right? Last year, minus 19%, lost zero money. Like it's a win-win. So it's almost a no-brainer, you know, especially if we did the full S&P with 8.5% cap, which we can change into these other funds as well. You can change your funds once a year. So we have tons of flexibility going in this product. We have tons of options. Any questions about the gains? And they'll be like, No, I think I understand it all. Or they'll ask a couple really basic questions, which will be easy to answer. And then I'll be like, okay, great. Any adjustments before I start the application on the amount per month? You're totally 100% comfortable with the 250. And then that gives me my one other option to be able to like, are we making any adjustments before I start this application so I don't have to backtrack? And they'll either be like, no, or I want to do a bit less, or do want to do a little more. Just gives me like a little bit of a barrier just to make sure that they are dead set on the price. I want to make sure they're dead set on the price because I hate chargebacks. So dead set on the price, we're good with it. And they'll be like, yep, we're good. And then I just simply start the application, rip through it. And right before I start the application, I always say, hey, so it's going to ask me a few agent questions in the application to start it off. But while I'm answering my agent questions, can you just run and grab your driver's license real quick? Because I know they're going to ask the driver's license number and a couple other questions. And then boom, we're in the app. Should be no objections.
How do you get their bank account information? Do you say voided check, or do you go say, just, I'll need your account and routing number? Is that later in the application?
So I just leave that a little bit later in the application once I get some small wins. So I like doing all screen share. All the questions are on the screen. There's virtually no objections. If the objections like, well, I don't give my social, well, the insurance company, or the way I ask the social question probably is a little bit different than most. The way I always ask it is I say, hey, so I'll be like, I fill out, first name, last name, address, and that'll be like social. It's got to match your death certificate. So whenever you pass away, no matter what, if you change your name or not, it matches.
That was good. That was really
so
good.
I just like, oh shit, if I die, like it's got to match. So that's how I ask it. I get very few objections on it. Like yesterday, for example, I got one that I haven't had in a while, and the guy's like, well, I don't give that. And I was like, well, every insurance application requires it. We need it to verify the medical. I mean, I don't think you want to send someone out to your house to verify you're not strapped to a hospital bed. Is that fair to say? And I'd be like, yeah, okay.
Okay.
Yeah. The guy was just like, all right. And then we ripped through it. And then the bank information, same thing. I'll have it. What day of the month is best for you for this to draft? 15th. Okay. Name of your bank, Bank of America. Okay, great. Routing number first.
Huh.
And then if they say, well, I don't have that, I'm like, great. It's usually in your mobile app or on the voided check. If most people just grab it off their mobile app, can you pull it up for me real quick?
Cool. Smooth.
And that's that. I do want to touch on this one too. If you want to rip on this one, is that all right?
Yeah. Do someone younger on this one so we can show some loans.
Okay. So same thing in the beginning. Get them on the Zoom.
NLG, by the way, guys. So for those of you, that was Ethos. This is NLG.
Yep. Same thing here. Like anybody like 300 or more, I just typically start here because it's going to be a little more usable for them in terms of the flexibility. So what I'll come in here, I'll be like, okay, great. Click on Flex Life. That's the product you'll use. You'll never use NL products with National Life Group. Okay. You'll never use NL products. Hold on one sec. That took too long on the other one.
No, it's all good. If you're enjoying this right now, drop your favorite emoji in the chat below. Show Calvin some love for how much he's sharing. There's just been nuggets after nuggets. So guys, give him light up that comment section for him. Thank you, Sheila.
All right. So real quick, again, never use NL products. It's for New York only. Make sure you use the standard. We'll use Flex Life. That's the product we'll use for this IUL example. What I'll do here, and this is kind of the average premium for me is a little bit higher. So I'm a little more versed in this piece. So what I like to do is when I have my Ringy open and I'm asking all these questions, I like to type everything in here so I know what I'm looking at. All right. Cool. So instead of having a pen and paper, I can match it all to my client. So like I'm in my zone. I got the screen share pulled up. I'm like, hey, just want to confirm birthday was 6/6/1992. All right. Oh, I gotta put this 1992. I usually just copy and paste everything. So, and then it's going to confirm standard non-smoker. So I don't really go into and explain all the different rate classes. Devin from NLG just said, always leave it at standard. It'll get corrected if it needs to, but don't ever adjust it unless you read the underwriting chart and it says specifically express standard non-tobacco. If it does say that, fix it accordingly because then it will match the illustration during underwriting. Okay.
Cool.
All right. So quickly come into death benefit and funding. I'll be like, great. So the way these products are set up, they're always set up on a minimum death benefit to maximize the cash value. the system and insurance company already knows that. They created this product specifically for that. So it's going to know to reduce the death benefit as low as possible, required by the IRS to get all those tax benefits. Make sense? Yep. Great. It's always set up on a monthly basis. You told me before that you were good with, $500 a month. That was about 5 to 7% of your income. Any changes or anything you would like to see differently here? And I'll wait a second and they'll like ponder it and I'll be like, no, everything looks good. Okay, great. So what we're going to do is we're going to look at here is we're going to look at some quick highlights and hypothetical situations in the product. So at your age and your health, you're going to start out with about a $438,000 death benefit. Like I said, anything happens tomorrow, you die, doesn't matter how much money you have in this column, it's going to pay out to your family 100% tax-free. Makes sense? Yep. Cool. So I like to touch on this first. I come over here on this max non-MEC premium. So what this means, that means that you can put up to $22,958 in the policy per anniversary year. So from today to all the way till the policy anniversary date, doesn't matter. You do it all in 1 month, you spread it across, you have the ability to put up to $22,958 in the policy per year. Does that make sense? And they'd be like, yeah, okay, great. So a couple of things here. In this cash accumulated column, is going to show you your money growing and compounding. Over here, you're just going to show you in this column where the money that you can take loans against, okay? So here in the next 10 years, let's say you want to take out a loan from your policy or borrow from your policy around $60,000, all right? This is assuming a 6.42% interest gain, which is conservative and below average of what it probably will or could be, all right?
Especially on what we just saw in the previous chart. Yeah.
Yeah, and they'll be like, okay, and I'll be like, so if let's say you want to take out 60K in the next 10 years and you want to go put a down payment on a house, right? Instead of you taking out of your bank account goes from 60 to 0. We're going to borrow it from this policy and they're going to leverage the debt benefit, which means that this money is still going to grow like you never touched it. So it's going to continue to get compound interest off that. Does that make sense? And they'd be like, yes. And then I'll explain it a little bit more and be like, so if you took out the $60,000 loan from your policy and you died the next day, there would be minus 60,000 in the debt benefit column. Just want to make sure you understand that. And they'd be like, yeah, that makes sense. Cool. All right. So I want to show you what the rate of returns look like for this. So what I'll do is I'll open up the illustration. I'll download it and it will pop up here in a moment. I'll be like, okay, so here's like some quick highlights of the policy. So assuming that you only put $500 a month in and you only got a 6.42% return, and by 69, you would have north of $700,000. And by retirement age, between 65 and 74,
Yeah.
around 70.
We see your original screen, the white one, the back office, the report pop up.
Let me, hold on one second. Boom. Okay. So it's going to have this and it's going to show us, hey, so if you only put $500 a month in the policy, and if you died tomorrow, this is what the death benefit would be, right? So if we only got a 6.42% return by only putting $500 a month in the policy, this is roughly what it would look like into 69 to 84. That looks pretty awesome, I would agree. So like I said before, the living benefits, like if anything were to happen, terminal, chronic, critical, or Alzheimer's, these are the benefits that you get included with that.
Dude, that illustrates so good. The visuals of that is so smooth. If I need cash, if I die tomorrow, if I become ill, like talk about ease.
Yeah. So like there's tons of value in this screen right here. So I just like, this is one you want to stop, pause on, give a quick brief, like questions, answers, like whatever you need to do. But this is like awesome. It looks great. And then usually like, no, there's not a ton of questions right here. Cause I talk a little bit fast and they're kind of just trying to take it all in, but I'll scroll down to this page. I love this page a lot. And I think it's pretty underused, but I would say, so this is the fund that it automatically like defaults to when you do minimum death, max cash value. It's a no cap. The US pace setter is pretty much the same as the S&P. There's not a lot of difference there. So I'll be like, hey, so in the last 5 years, 13.863% gain. This is updated every single day, by the way, like it changes daily. So this is giving you live results. 13.63% gain. Last 10 years, 12.10. Last 15 years, 13.88. Last 20 years, 15.88. Illustration, like I said before, 6.42%. That's what it's showing you. So this is literally what it earned in the last 5 to 20 years. Any questions here? And they'll be like,
Max illustrated rate. So we can't say, and this is a big asterisk on both our screens, you most likely will do better than what the illustration is showing.
yeah, and
Results not guaranteed, no guarantees. But
no
this
guarantees.
is just what the market has done historically for the past 5, 10, and 15, 20-year blocks of time.
Yeah. I would never promise a client they're going to get that. I'm just saying, hey, this is what it has done. You make your decision based off of that.
Yeah. Love it.
And then they'll be like, okay, great. And basically what I'll do from here is I will go back to this screen and I'll be like, okay, awesome. So no questions. And then I'll just click on this green button right over here to the left. It's usually green. And because I didn't put the client's information in here, it's grayed out. It won't let you start it. So if there's any questions, like it'll tell you can't start the application, but it'll be green once you type in Bob Doe or Brady Polson or whoever you want to put in here. It'll turn green. You click on the green button. It'll upload this exact illustration right into the application, pre-filled out, all of the numbers, everything. All you have to do is put the client's information in.
Sick. Will you pull that up one more time and show the potential policy loans that they could take later in life? Like if they started taking them at 52 or 62, because they're 32, if they're going to put $500 a month away into it, what does that look like? So those are some tax your retirement is my favorite thing to sell IULs with.
Yep. So if you want to show like different examples here too. So I don't go too much into this because I just show them like the bigger numbers. But if you like, let's say you want to start taking loans out of the policy, right? Let's see here. You would come in here and you would click from and to. Probably got to put client's information in here for myself. That looks good. Great. Okay. So like, let's say we're gonna pay for this policy all the way till 65. And we're gonna do distributions, and we're gonna solve for lifetime income benefit, okay? And then it's automatically gonna default to when I stop paying. And it's gonna show us what the payout would look like when I start taking distributions. So this is gonna show us at age 66, roughly in there, I'm gonna start withdrawing $43,000 a year for the rest of my life, 100% tax-free, don't have any obligation to pay it back.
Awesome.
Assuming I only put $500 a month in and I'd never overfunded it.
Awesome. 6,000 a year. That's great, man.
Yeah. And so the big things to touch on is, and Devin from NLG told me to talk on this, is the big thing to touch on here is make sure you touch on what you can overfund it by, because that's going to automatically change the amount of cash value they have. And, as the death benefit goes up. Another thing that some people do, some people don't do, if you change it to increasing and then you switch it over in the illustration at like 65 to level, yes, there'll be a little bit more cash value, but the only way that works is as the agent or as the client, they have to remember to call NLG and manually change it. The company won't do it automatically. They won't stop payments. They won't do any of that stuff. So he said it's best and most preferred to leave it at level because there's a 99.99% chance they will not remember to change it.
The death benefit.
They will not remember to change the death benefit increasing the level option. So
I don't actually know what those two things do, but my due understanding is if the death benefit increases, that will cost more money.
It'll increase the cost of insurance as they get older. So
Correct.
Let's say you never change the increasing death benefit and it just keeps floating all the way up. Eventually it's gonna start eating into their cash value because they're gonna start using cash value to pay that premium, which is not what you want to do. So like as a safety net, like especially as an agent and for the client's protection going forward, yeah, it looks a little bit better in the beginning to do increasing to get a little bit like slightly more cash value. But if they don't switch it back over at that time, then it's gonna start eating up all of their cash value and it was all for nothing.
Got it.
So I don't even go into explaining that. I don't like to spend a ton of time on it. It just creates more questions. So just leave it default as level. If you're super experienced, you want to try to manage everyone's policies individually, do you? But this is what I would recommend, especially for new agents.
It's epic. Any final tie downs, things you're doing, any brochures you send them, any brownies, any emails you send? What's the final stuff you're doing to help keep clients happy and business on the books?
So the next thing I do, I submit the application and I'll be like, hey, so it usually takes the insurance company a couple of weeks to review and approve and make sure that's something that you can get approved for. If for whatever reason you do not get approved, the cool thing about my job is I have multiple carriers we'll be able to filter through and figure out which one's going to be the best fit. I prefer to start, and they'll be like, well, why didn't you show me anything else? And I'll be like, if that arises, that doesn't always happen. I'll be like, well, the cool thing about National Live Group is I personally have one of myself, my family, and my friends. We all love it. And the reason for that is because they've been around for 175 years. And last year, they were rated by the #1 insurance company by Forbes. So they have a great rating. The technology is very important to the clients. And they're a mutually owned company, which means that as the company grows, so does your insurance policy. So it's good that you want to be a part of a company that's been around for a long time and is constantly improving their technology. They have an app on your phone that as soon as you get approved, you'll be able to download it. You can look at your policy when you're on your way to work or whatever. You can see it at all times. You don't need to be in front of a computer or have it stashed away into your file folder that's under your bed. And they're like, oh, cool. And I'll be like, great. So what's going to happen is once you're approved, the insurance company is going to create these policy delivery documents, and they're going to get sent to me, then you. Once you get those delivery documents, that's just an acceptance that you received the policy. Everything is good. You don't have to do anything but sign it. And then it will start and you'll be able to see it in your portal. You can't get into your portal until you sign those delivery documents. Does that make sense? And they'll be like, yes. And I'll be like, okay, good. I'll mark it as sold and ringy or whatever, GHL or whatever you use. And then I'll be like, the final tie down, I'm like, hey, so like I said before, I'm going to be your agent for life. That means that if you have friends, family, cousin, brother, sister, or you just have questions about the insurance policy, here's my personal phone number. I want you to put it in your phone right now. That way, when I'm going to tell you to put Calvin Wright and just put insurance next to it, because there's a 99% chance you're going to forget my name, but you'll never forget that you got insurance. So when you search in your phone, you see insurance, you'll see my name. It's going to pop up and it's all going to click, and you can call me 9 p.m., 10 p.m., 6 a.m. doesn't matter. I'll be here to help you.
That's awesome, man. That's awesome. Calvin, you're a national treasure, bro. That was so good. The detail, the specificity. I know this is one that's going to be watched hundreds, if not thousands of times on replay. Couldn't be more grateful for the detail you went through. And, you know, it's no secret why you're still on the level you are and why your team's growing the same rate, because you're passionate about this stuff. Here's one final question. How many appointments do you think you're presenting a week?
Presenting a week, probably
and
10 to,
yeah,
10
be
to
honest,
20,
yeah.
10 to 20 probably.
It's not,
but
50.
like, it's nothing to brag about. It's nothing like crazy, but the thing is to create the most high intent appointments you can get in front of. And you do that with getting in the Zoom and creating like curiosity in the beginning. And then also just remember, like, it's going to take a little bit of time to get good at this, and it's okay. Like you're going to kind of stumble through the learning curve, but the cool thing is it's good. It's a really good product for the client. You get paid a ton of money on it, and they virtually just don't charge back. So it's a really good, solid product.
It's awesome, man. I love it. Calvin, appreciate you. Grateful for you. Can't wait to see you in Dallas. We'll have some more fun there. And everyone, drop something in the chat. Exclamation point, CW emoji, FFL Forefront. Give them some love. So appreciate you, bro. Thank you for jumping on. Thank you for all you shared. More fun to come, brother.
Thank you so much. I'll see you in a couple of weeks, Grady.
Awesome, man. Talk soon.